Hi, I'm Bob Grisanti, your cameraman. You're watching Taking Stock.
All right, welcome to the broadcast. 2 minutes to go here into the closing bell on this Tuesday, July 7th. We are off our session highs, but at least we are off also our session lows. Peter Tuchman, the Einstein of Wall Street, joins me now. A fascinating day. We had the Dow in record-setting territory. It didn't last long.
No, it didn't.
What did you see in the afternoon session here today? It's a lot of red on the board.
The afternoon session got sort of tainted by some news coming out about licensing, about Iran making sales in oil, that the Feds decided they were no longer going to allow. And that's when the market started to break. The imbalances have been sort of, sell $500 million, buy $500 million all afternoon. I don't think it's a big contributing factor. Market's trying to get a little bit of its footing. I think we're seeing one day up, one day down. It's once again advances versus declines. Seem very rotational as it's sort of 50-50 with not a big distinction on how many stocks are being bought and how many are being sold. But I think that news out of Iran about the Feds nixing the licensing deal that they'd gotten 3 or 4 months ago, that Iran could make sales and now can no longer, that really knocked the market down. You saw that happen there. You saw that sell-off right around the 3-ish level, and now I think we're just seeing a little bit of a buyback, trying to find some cheaper stock.
Yeah, it kind of reminds me a little bit of how a lot of the month of March went, where oil benchmarks move up. West Texas and Brent both up about 5%. Downward pressure on equities. Thank you for being here for the perspective as always.
Also, oil up, markets down.
Oil up, equities down on the day.
Point for point, it's a pleasure.
Time now for the closing bell. Team from Goldman Sachs Asset Management down here on the trading floor of the big board. Just doing the honors moment ago, we will bring you all our final tail of the tape on this Tuesday afternoon. The S&P 500 in the red, 0.5%. The Dow Jones Industrial Average down about 0.25%. The New York Stock Exchange Composite Index just 1 day removed from its own round of all-time highs in the red, about 0.25%. And the small caps, the Russell 2000, as to be expected, the hardest hit of the major indexes in the red, 0.9%. In the S&P 500, energy, real estate, healthcare, far and away your outperformers, but your laggards, industrials, tech, and materials. To the Dow, Salesforce, a strong session. Similar story for IBM as well as Johnson & Johnson. Your Dow 30 component laggards on this Tuesday, Caterpillar, Honeywell, and Visa. Mixed territory for your Mag 7 stocks, an outperforming day for Meta, shares up 3%. A bit of sell pressure for Tesla, down 3%. Let's bring in our first proper broadcast guest, Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. Come on over this way. Nice to see you.
Same here. Good to see you again.
Really grateful for your time to join us here on Taking Stock. So you sent along really interesting notes about labor force. Let me ask your take on participation rate, a multi-decade low. What do you see in the numbers?
I mean, boy, did we ring in the 250th anniversary of the nation with the lowest labor force participation rate since 1976, when we had the bicentennial. So we're not seeing a lot of dynamism in the workforce. In fact, this morning's ADP weekly data came out at about 21,000. That's an 84,000 monthly run rate, which is about half of what it was just a few weeks ago. So we're back to where we were in March in terms of how quickly we're coming off kind of the high of the let's panic buy in front of oil prices going up. Let's hurry up and hire people for the World Cup. By the way, great job, Argentina. Great game. But it's, we're seeing, and I think that's one of the reasons you're seeing the markets whipsaw. I mean, you're seeing almost daily violent rotations right now. You're seeing consolidation, but you're seeing things that you would have normally seen in a month's time or in several months' time in a matter of the days. I mean, this volatility is insane.
So what does all this tell you about the underlying health of the U.S. labor market? And I wonder, Danielle, from your years of expertise, are you looking at things and seeing things in the data you think the rest of us would benefit from paying a little bit more attention to?
So I think we need to pay attention to which jobs are being created, which jobs are being destroyed. We're down more than 1 million full-time jobs, so we're creating a lot of gig workers, a lot of Uber drivers, a lot of DoorDash drivers, but that's not what you want to see for sustainable wage inflation. In fact, if you look at the Atlanta Fed, we've retraced wage gains all the way back to 2019 before the pandemic.
You mentioned the World Cup earlier. I think there had been many expectations for hospitality sector in particular.
We saw that.
The narrative being, hey, we get this big bump.
That's right.
So far, have things played out according to those expectations?
We saw all of that and then some, give it back in June. So we saw a multiple sigma event in terms of job losses in that sector in June. So you're seeing how short-lived that burst is. We also had tax refund season come and go. So right now, the U.S. economy is going to have to stand on its own two legs, and let's see how the second half of the year plays out with that in mind.
How about your take on the difference between what we're seeing between payrolls and the household survey?
Boy.
Are they telling us two different pictures?
Day
and is
and
there one
night.
that's a bit more maybe believable from your perspective?
Well, I mean, you have to bear in mind what we started talking about, the labor force participation rate. When that declines quickly, you're going to see the unemployment rate decline. That's just numerator denominator. So in this case, it was not a good thing that we saw the unemployment rate decline to 4.2% because that was a reflection of people giving up on finding work. So right now, the household survey is giving us a much better picture of reality compared to non-farm payrolls. And in fact, the new Fed chair, Kevin Warsh, said, you know, talk to me on the third revision for payrolls. Other than that, they're irrelevant. And he's talking about 18 months after they're reported. This is one of the most interesting tidbits that's easy to take away. Last 40 months of payrolls, 30 of them have been revised downward.
Wow, downward revisions.
Downward revision, 30 of them. At some point you're like, okay, there's something wrong with the model, but that's why Warsh is rightly not trusting the data, and I hope that he comes in and looks for alternative data sets the way he's promising to do.
That's right. He is talking about a lot of big changes to new task forces.
There's a task force for that.
And we get Fed minutes tomorrow from
I
his
know.
first meeting in May, so we'll have to see how investors
We
digest
will.
that.
I bet they might be quieter than we're expecting.
Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. It's been some time since I've seen you. Really grateful for you joining the show today.
Likewise.
Thanks a
Come
lot
down
for being here.
anytime.
Of course,
Take
great to
care.
have you. Robbie will grab your microphone. Todd will head this way. Here are the few of the top analyst calls that moved the tape this morning here on Wall Street. You may have missed. First up, Morgan Stanley starting coverage on SpaceX as overweight. They call it an X of one position in space infrastructure after its huge IPO pop. Shares have reconsolidated around the 157 level. Next up, B of A reiterating Shopify, saying the company, as a buy, saying the company is ready for the next phase of growth. 150 price target, shares down about 21% year to date. Finally, RBC reiterating Tesla with an outperforming rating. Price target boost from 475 to 500. Shares are in the red about 10% so far since the start of 2026. Todd, we'll take a look at shares of Figma, not having the best year, but having a pretty good day. Shares up more than 5% after getting an upgrade from B of A to buy from neutral. Those analysts say the stock is simply too attractive to ignore at these levels. Remember, Figma has been caught up in that AI disrupting software storyline all year. $30 price target for a stock that is now down 85% from its 52-week high. America, as you may have heard, just celebrated its 250th birthday, and Cheddar's very own Justine Miller has more on a few companies that are actually older than the nation itself. Take a look now at part two, this time highlighting nearby Franz's Tavern.
As America celebrates its 250th birthday, we're taking a closer look at three businesses all older than the country itself, all founded before 1776 and all still going strong on this month's Down to Business. A 100 miles south, the quiet country roads become bustling sidewalks in lower Manhattan. The bushy trees replaced with sharp skyscrapers. Nestled between the glass and metal monoliths, Franz's Tavern, established back in 1762, 14 years before the country was formed.
I pinch myself every day when I see this beautiful building that I'm now a part of, and it's we definitely don't take that for granted.
Eddie Travers, the proud owner along with his wife since 2010.
We were looking for our own place, we were looking for something small, but it didn't work out that way.
Instead, taking over the sprawling Franz's Tavern with a labyrinth of bars and dining rooms and an even bigger history, much of it documented in the museum housed upstairs.
Right here in the long room, George Washington delivered a farewell address to his officers after the last British troops left New York City following the end of the Revolutionary War.
The tavern, originally named the Queen's Head since Samuel Francis opened it during British occupation, was the heart of Patriot activity in the 1600s and 1700s, the meeting place for the Sons of Liberty, a favorite haunt of George Washington, and the site of the nation's first executive office. The building itself dates back to 1719, officially the oldest in Manhattan.
It's pretty amazing what Francis Tavern has done for America.
But Eddie also looks at his and his wife's own efforts, saying it wasn't always easy.
In the beginning it was difficult. The weekends was so quiet.
But they resisted the kitsch that so many historical restaurants fall prey to.
We never wanted to go over touristy on it. Nobody's wearing wigs or anything like that, you know what I mean? We just basically peeled it back to its original glory.
Trying strategies like adding live music, hoping that word would spread naturally without flashy PR.
And that way it just keeps on growing at a slower rate, but it's more sustainable.
But major setbacks hit with Hurricane Sandy, causing what he estimates as $300,000 to $400,000 of damage.
I remember when we walked in that morning, we thought it was gone. I genuinely thought, we're not coming back from this.
But they pushed on, facing the pandemic several years later, reopening stronger than before, doubling their sales since 2019. Visitors excited for the equal servings of quality food and drinks and fascinating history.
That was actually the first thing I did, was go down and get a nice lager. And yeah, just when I was drinking that, I was thinking back like, hey, George Washington was here. He may have been sitting right in this exact seat and having a beer. So how cool is that?
I think it's exactly why we came. We said this is a nice combination of getting a little bit of your typical tavern and pub, but also get a feel for yesteryear.
And how crucial it is for places like this to be preserved.
It's super important. We don't want to lose that, obviously we can document everything, but to have the physical buildings that we once worked in and all these little, knickknacks and tables and glassware that you can come in here and see. It's just, I think it's so important to preserve all of that as part of our history.
Eddie looking forward to celebrating the country's 250th birthday in a place so intertwined in its early days.
We have a very important job here. We're very proud of what we've done, but more so of what everybody has done to keep Francis Tavern here. Like the 250 is just, it's going to be incredible.
Welcome back to the show. You are watching this Tuesday afternoon edition of Taking Stock, live from the trading floor of the New York Stock Exchange. Austin King joins us now. He is the founder at Nomina, an institutional crypto intelligence and data company. Nice to see you here today. Thanks for joining us.
Yeah, thanks so much for having me.
So for people that are looking at how far we have fallen for Bitcoin and the other crypto majors since October, do you view this as a typical crypto reset, or is there something a little bit different going on this time?
I mean, a little bit of both. At this point, this marks the 10th year that I've been in the crypto industry, and every time we soar incredibly high and then we crash back down. And so that classic pattern is playing out right now, but what's happening kind of behind the scenes on the innovation front is what's changing up. So each cycle, things crash, and then people stop paying attention, but key innovations that drive the next cycle start getting built up. And that's what's happening right now, even if people really aren't paying as much attention to it.
So it doesn't sound like there's a reason to panic for people that are saying out there, it's like, oh my goodness, is there a bull case to be had here for the crypto majors? Sounds like there's a little bit of patience that's necessary to be in the game.
If you don't have patience, you shouldn't be playing around in crypto in the first place. But yeah, I mean, there is like light on the horizon is the way that I'm looking at it.
I know you do a great job tracking institutional trading and overall on-chain activity. What do you see behind the headlines that a lot of investors out there might otherwise miss?
Yeah, so one of those things that's different this cycle compared to previous cycles is the amount of activity that's actually happening on blockchains today is very vast. It's not like just a lot of trading that's happening. The different types of trading. So, I'm sure everybody here has heard of prediction markets and just how much attention those have gotten over the past couple years. The types of markets that are being traded on blockchains are just incredibly complex and diverse compared to previous bear markets we've been in. So that's one huge difference. Another thing that's happened here is historically exchanges like Binance have kept most of the derivatives trading in crypto. A lot of that is moving on chain today on a platform called Hyperliquid. So from my perspective, those are kind of the two most like native blockchain things that are happening. And a lot of people are hearing about prediction markets, but I'm not sure they really understand the amount of trading that is actually happening on blockchains today downstream of that.
I wonder, are there particular parts of the crypto ecosystem that you see as making legitimate progress right now that we might be missing a little bit, as so much of the focus is on, oh my goodness, we're down more than 50% from where we were on October 9th?
Yeah, I think the biggest, the thing that you can just easily point to and be like, this is very legitimate. This is a business that's scaling to kind of a previously unseen scale in the crypto industry, is Hyperliquid. So it's a platform for trading derivatives. Over the past month, they traded $250 billion in volume. And in that process, they made $80 million in fees. And they've really been scaling up this business, blockchain, whatever you want to call it, for the past year and a half now. This isn't just a flash in the pan. It's not the classic pattern we see in crypto. They've really been scaling this. And the scale that it is hit at this point is pretty astounding. Really, it's unlike anything I've seen in crypto before.
What is your outlook or best sense on what happens the second half of 2026? Not so much for these exciting new ecosystem products, but even for the price action for people out there who have been enthusiasts and holders for a long time, and they keep checking or saying, come on, I want my crypto portfolio to start doing something.
Yeah, well, I mean, the first thing I'd say is I'm with them. We all want it to go up. But honestly, on the horizon, on the 6-month time frame, I don't really see any huge bull catalyst that is going to change anything. But again, it goes back to what I said at the beginning. You shouldn't be in crypto if you're not patient. So this is just a long-term game. If you come in and you're planning to trade on a daily time frame or a weekly time frame, you're probably going to get churned out of this market. But this is technology that just last week, Visa, MasterCard, Stripe announced a new stablecoin. Like, we're now at a point in the evolution of the industry where some of the world's largest finance companies are just very concretely not only saying, okay, there's something here, but they're taking concrete steps forward to actually utilize this technology to improve their businesses.
Austin King is the founder of Nomina. Really grateful for your time today, my man. Thank you for stopping by.
Cheers.
You're welcome back anytime. Don't go anywhere. A lot more Taking Stock coming up live from the trading floor right after this. Welcome back. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence for your Tuesday afternoon. First up at this hour, all of the crypto majors are in the red, albeit only fractionally. Next up, cybersecurity firm Sysdig says it documented the first known case of agentic AI orchestrating a ransomware attack. We'll bring you more on that story later in the week. Finally, Spotify removing 500,000 artificial streams from Malcolm Todd's hit song Earrings after suspected manipulation linked to traders on Kalshi as well as on Polymarket. The New York Stock Exchange's very own Kristen Scholler sat down with Nikesh Arora, the CEO of Palo Alto Networks, at the All-In Liquidity Summit to discuss AI's impact on the market. Take a look.
We're here at the All-In Liquidity Summit in Yountville, California, and I'm pleased to be joined by Nikesh Arora. He's chairman and CEO of Palo Alto Networks, also a speaker on stage. Nikesh, welcome.
Thank you.
Yeah, thanks so much for taking the time to sit down with us. You just finished on stage earlier.
Yes, I did.
What is your message here at the Liquidity Summit?
Look, this is a fascinating conference because you're seeing about, as I heard last night, $7.7 trillion represented out in the room. And I think it's fascinating to see people's perspective in terms of, given the huge technological inflection we're at, everybody's interested to see where this is all going from an AI infrastructure perspective, an AI deployment perspective, and just the fact that all these investors together, I'm sure, not just the programmatic part, but the post-program part where they get to hang out with each other and actually share notes and compare notes is going to be fascinating.
AI has been a major topic of conversation here, and we're just a few hours into today's programming.
Yes.
On Monday to really kick things into full gear. Pros and cons come up. I'm sure from your perspective you see a lot of pros. Walk me through your thinking big picture.
Well, look, big picture, we've never had a technological inflection at this scale. 2 years ago or 3 years ago, ChatGPT came out and all of us just sort of woke up and said, oh my God, look at this AI thing. And now it's sort of the fastest thing that has caught on. Anywhere from 5-year-old kids doing their homework with ChatGPT to older people trying to figure out what ails them and asking their favorite ChatGPT or Gemini or Claude. So I think the way this has taken on, sort of like wildfire, has exposed all of us to the immense possibility it brings. Of course, it brings with it lots of interesting questions around ethics, around capabilities. It also brings a lot of questions around how are we going to fund all of this. A lot of infrastructure is needed to make this really work. So lots of amazing questions, but I think being an optimist, the promise of AI is huge.
What does this mean for software, especially when it comes to an upgrade cycle?
Well, I think software is more than likely going to get rewritten in the next 5 to 10 years. I think the capabilities that AI has shown, where it's able to write code, it's able to interpret intent, I think we've spent our lives writing software where we've been trying to interpret user intent and trying to design software to feed that intent. AI has the ability to interpret the intent and solve the problem on the fly. So I think the way we do software development, the way we think about products is going to fundamentally change in the next 5 to 10 years. So it's a huge rewrite. A lot of stuff will have to be redone, but it's immense possibilities for all the young people who are out there, entrepreneurs, trying to think about what to do next.
Can AI combat AI?
If you wanted to, hopefully AI is supplementing AI and not putting it in a combative position. But yes, from a cybersecurity perspective, if bad actors get their hands on it and they're going to use AI to try and attack companies or breach companies, we can arm AI on the defensive side to make sure that it's able to contend with what bad actors are trying to do with AI.
Talk to me more about what this autonomous defense looks like.
Look, if you think about AI, and hopefully you've used it a lot, and you realize the more context you give it, the smarter it becomes, right? The more you tell it what you're trying to do, the more you arm it with facts, the more you arm it with data, it gets better and better at understanding your intent, and hence is able to sort of get you better outcomes. I think sort of on the defensive side, autonomous security side, it's the same thing. The more it understands the organizational context, the more it understands how you work, the more it understands what normal looks like, it is able to understand when something anomalous happens. When something anomalous happens, it's able to understand the intent and say, oh my God, this doesn't look right. But for it to know what doesn't look right, it needs to know what right looks like. So I think we have to spend a lot more time and effort building the capability from the contextual side, the memory of the organization, what's the right answer. It's kind of like training a car to drive itself. Right? You have to give it all the context around it for it to make good decisions. Similarly, you have to give defensive AI a lot more context in the enterprise for it to be able to go and defend itself against bad actors.
Give our viewers a sense, whether or not they're familiar with Palo Alto Networks, how you are enabling this to make good decisions.
Well, look, we are the world's largest cybersecurity company. As a consequence, we have the privilege of defending tens of thousands of enterprises around the world. And in cybersecurity, it's somewhat simplistic, right? If it's bad and I know it, I'll stop it at the perimeter. So we are protecting north of 150 million sort of perimeter endpoints in the world. If we see something bad, we stop it. The problem happens is when it's not quite bad, you're not quite sure, you have to figure out whether it's bad or not. That's when AI comes into play, where you have to arm yourself with all the context of the organization, all the data, to be able to interpret that in real time so you can actually defend it in real time. So that's what we do. We take real-time signals, understand them, interpret them, and try and protect our customers real time to make sure the bad actors can't get into their infrastructure.
We appreciate you taking the time to sit down with us here at the All in Liquidity Summit.
Thank you for having me.
Time now for the latest headlines in the world of startups, raises, and rounds for your Tuesday afternoon. First up, geothermal startup. There we go. Quaise Energy raising more than $130 million to scale its super hot rock drilling technology for AI data centers. Next up, German startup Proxima Fusion raising $470 million US at a $2.7 billion US valuation, backed by Google and RWE. Finally, at this hour, institutional crypto exchange EDX Markets raising $76 million in a Series C. That round is led by Japan's SBI Holdings to expand its trading, clearing, and settlement platform for institutional investors. And now Scarlett Sieber of Money 2020 is back with a whole new edition of Jargon Translator, where she puts complicated finance terminology into language that anyone can understand. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Jargon Translator. Today's term is settlement finality. Settlement finality answers a deceptively simple question: when is a transaction actually done? In finance, instant doesn't always mean final. A payment can be authorized, recorded, and even reflected in an account and still be reversible. Settlement finality is the moment a transaction can no longer be unwound, and this matters because a lot of reasons, including credit risks live in the gap, liquidity depends on certainty, and systems behave differently when reversals are possible. Traditional banking systems often trade speed for reversibility. Newer systems promise speed and finality, but introduce other risks. So let's fast forward to today. As real-time payments and digital assets grow, settlement finality becomes a design choice, not just a technical one. Speed is appealing, and finality is power. Understanding the difference explains a lot about how modern payment systems behave under stress. That is your jargon translated. If there's a payment term that you want unpacked properly, drop it below and it might just make the cut. In the meantime, back over to you.
Tomorrow here on Wall Street at 2 o'clock, we get the release of the recent FOMC minutes from the central bank. And this time tomorrow after the close, the latest quarterly results from Levi Strauss. Thanks for watching today's edition of Taking Stock live from the one and only New York Stock Exchange. Have a great Tuesday night. We'll see you again tomorrow.